all of us by surprise. Participation coming in from Reliance, ONGC, Coal India, L&T, what have you. And we managed to close above the 20 DMA for the Nifty itself. So we're back at that 21,850 print when it comes to the Nifty futures alone. And it was energy all the way, not just Reliance, but you had ONGC, some of the OMCs as well participate. That's the one which managed to hit a record high. And guess what? FIIs as well have turned buyers after a long hiatus of 7 days. Minuscule as it may be, only a 3-digit figure, but buyers nonetheless. So good news all across.
Okay, so what happened yesterday and what would be the impact of a brilliant Monday? That's what we need to understand. I think it's Reliance. And when a stock like Reliance, it moves, it just, in a sense, galvanizes the entire, market per se. So a variety of factors why market moved yesterday. There was a bit of a definite comeback by FIs after what has transpired on the political front in Bihar. B, FIs are back, but this time around, they are just not buying banks, they are buying different stocks. And C, there is definitely an element of pre-budget buying, which in a sense has been the missing link. Maybe it's making a comeback. Now, what has happened courtesy Reliance Nifty has gone back. It's gone to levels which really matter. Are we in for a breakout trade just ahead of budget, and will it extend itself beyond budget? So I think if you take Reliance frankly out of the equation, the market may look very different. But why should you take a Reliance out of the equation? Because Reliance has done the trick. It was a bravo move in Reliance, and this was largely dominated by short covering and also by fresh buying, which seems to be kicking in. And when Reliance moves, it's a large stock, it's a stock which has started outperforming this year, then suddenly everybody will talk about the new leadership in the market. Markets have been bereft of any large leader because HDFC Bank has not fired. Reliance did show evidence of coming back, which it did, and now there is brilliant follow buying in Reliance. So I think it was only Vimal, the line which used to use earlier, only Vimal for the markets yesterday.
Yes, indeed. It was on fire. Use whatever adjective you want to describe it, because it was your clear star performer in trade yesterday, seeing its biggest move since May 20th, 2022, contributing over 150 points to the move, with the market cap actually past the 19 lakh crore mark. So that's the big star in trade yesterday. And, Nikunj, maybe I'm stretching that point a little bit further, given that the stock has never underperformed for 2 straight years since the year 2015. Do you think it can outperform in the year ahead, just going by the overall fundamentals?
It has all the elements which are there, which in a sense can ensure that for rest of the year, Reliance has potential to outperform the Nifty. See, for Reliance, you'll have to benchmark it with the Nifty. And last 2 years, the performance, including yesterday also, is just not very, it's not very strong. Now, typically, the Reliance has done well when they are nearing the end of a capex cycle, which is what they are for the new energy business. B, given that this would be a great year for the entire startup ecosystem in terms of new listing, I guess somewhere the entire potential of sum of parts for Jio should change. C, the retail business, I think, is firing full cylinders. Sooner than later, markets will start talking about a probable listing of Jio Financials, or perhaps a probable listing of what may happen to Jio Retail. So that is not for consideration, but that is something which surely towards the second half of the year is something markets would talk about. But in terms of the specific move yesterday, and since we are talking about only this year and yesterday, there is no large trigger. Numbers did not give that trigger per se. So I think yesterday's market action was largely technical in nature, because Reliance has been an underweight position for a lot of global institutional investors. Flows are making a comeback, and flows this time are making a comeback in differentiated stocks. Let's look at the flow picture, and I just want to make a point here. Aisha, there used to be a pattern when FIs were buying, they would buy banks and they would buy IT. There was a pattern when FIs would sell, they would only sell banks and IT and some consumer names. Right now, FIs have come back October, November, December, and they did not buy banks aggressively. And every time an FIs are selling, they're selling banks, but when they're buying, they are not buying banks. And there seems to be a big departure in that trend. You're not historically buying what has been your favorite sector, which is banks and financials, but you are buying different stocks. So on bad days, when FIs are selling banks are going down because they're selling banks, they're reducing the exposure to banks. But on good days when FIs are coming back, they are buying very different stocks on the consumption space, on the manufacturing space. I've also been told that PSU stocks are now finding mention in some of their FI portfolios. I never thought that would happen, but that is a churn which I think is evident, and that is a churn which we need to recognize and respect.
Well, absolutely. And then, of course, you have the blue chip earnings, which we're going to react to today. Bajaj Finance, which was at best an inline set. And from ITC, you would have to say it was a little bit of a weak performance, even though the demerger has gotten a go-ahead. There's a dividend announcement. But asset quality, that's seen a mild bit of a deterioration when it comes to Bajaj Finance.
Okay, these are not wow numbers.
Yeah.
With Bajaj Finance, we are accustomed to using the word wow rather, freely. So these numbers do not warrant a big uptick in terms of earning estimates. B, there is a cost of credit or cost pressure on Bajaj Finance seems to be coming back. That I think is evident. But for Bajaj Finance, what is important here is growth is intact. Unlike HDFC Bank, where growth got challenged, unlike HDFC Bank, where they would be conscious of bringing growth down to protect their margins, that's not the story for Bajaj Finance. It is still growing at 25% plus. And valuations are not like sky high in a market where you are bereft of a lot of good companies which are growing at 20% plus. Bajaj Finance is just north of premium valuations which actually it commanded pre-COVID. So the business has built up. Valuations are not that stretched. The stock is not at an all-time high, and I will not be surprised that in the near term, if one is looking at more money coming out of private banks into Bajaj Finance, that factor could be at play. I think the trade is very evident for rest of the day that it is going to be HDFC Bank versus Bajaj Finance, and if I do that comparison, for the moment, Bajaj Finance is winning hands down. ITC cigarette volumes were not great, but that is something which markets will see through it because of the base effect and other factors. Again, the stock could remain slightly lukewarm. The response to numbers will not be that great. But in my book, if ITC falls a lot, which is that you get a 5-10% correction, I think it's time to go back to ITC as part of your core portfolio, because the uptrend in their cigarette business, the uptrend in their entire FMCG business, paper business and hotel business, I think is real. And this time around, every time ITC tends to be this favorite budget stock, it's vote on account, guys. So I don't think anything should happen for ITC. So that again, in a sense, which has been the albatross around the neck for ITC ahead of budget, taxation, which is not going to change.
Yeah, although the cigarette EBIT growth has been the slowest on a year-on-year basis in several years for ITC, and that's what's really dampened the street, considering cigarettes as part of their revenues is the largest in the pie. But it's not done yet. You've got L&T as well as Dr. Reddy's too, and L&T is going to be quite critical a number to look out for.
It's still very cheap, Asha, and even the order flow is going to be flat. I think that from a market standpoint, this is one stock where again things are really fitting very right in terms of the old business, which is the road business, engineering business, construction business, and the defense business. On the IT front, look, markets know that the IT business for L&T on a consolidated basis is not doing that great. For me, it amazes me that everybody likes L&T, everybody loves L&T. They have great capital allocation. They managed to beat the numbers. They're very smart in terms of what they want to do, what businesses they don't want to do. The stock is not expensive.